Good morning, ladies and gentlemen. Today's Wednesday, October 9th, and I'm back with another Wednesday show. Um, boy, there's a lot going on. Today at 2 o'clock, the Fed minutes from the last Fed meeting come out, so that could be a catalyst for the market to do something, maybe. And if you guys were watching the market yesterday, it was a wild day, right? Jerome Powell spoke at some kind of conference, and he basically announced that the Fed is going to start increasing their balance sheet again. Wow, right? And do what he says is not QE. They're considering buying treasuries and don't call it QE, and so that was pretty wild. And what was even sort of strange was that the market reaction to that, right? I mean, in the past, when the Fed has announced that they're going to become more accommodative, typically the market rallies off of that news, and you would think so. I mean, basically, what the Fed's got in mind here is they're going to increase their balance sheet. They're going to start buying treasuries, buying more bonds, which essentially is QE, and they're very likely to lower rates again at the next meeting, right? In October this month, if not December, which incidentally will be the third rate cut in a row. And if you look at this chart here, I'm kind of zoomed in on the S&P. This was the first rate cut, right? They hiked like what 9 times in a row, and then the market, obviously the fourth quarter last year, the market took a winger, and so Trump was blaming the Fed for that and all that good stuff. And so, anyways, they reversed course, right? I believe it was in February. They basically reversed course, and so anyway, what you're looking at here is, and I mean, this has all happened relatively quickly. So here was the first rate cut on July 31st, and I mean, there was a lot going on right then, right? So it's just kind of interesting that they cut rates, and then of course the following day the trade war with China heated up, and China devalued their currency and all that stuff we've talked about in the past. And then here was the rate cut that happened in September on 9/18, and of course the market took another winger. And so I've been pointing out here for a long time, since last year, about how each time the Fed cuts rates, that the market has actually had a correction subsequently. So anyway, so today, I get up and flip on CNBC, and lo and behold, the futures are up significantly on hopes for a trade deal. And so that's the other thing. That's what everybody's talking about now. And it's kind of annoying. This whole trade war with China thing's been going on for well over a year. The administration, you get Larry Kudlow out there, and he keeps saying, "Oh yeah, he expects a deal, and trade talks are coming along well, and all this stuff." And he's like the boy that cried wolf at this point. And so, I'm telling you, over the last year, the market has had 50 rallies just based on news headlines about a trade deal with China. So everything's kind of hanging in the balance, really. And I mean, there's a lot going on. So technically speaking, I've got this chart marked up here, and not a whole lot's changed, right? You guys know we've been following this overhead resistance line, which is held, and I always look at this on the weekly chart, right? This overhead resistance line, on any rally, the weekly chart's always a good big picture place to start, but on any weekly rally, and that line's rising, by the way. And so, in theory, if we got a huge rally, we could hit new highs and still get stopped up there again, which, I think that a lot of the big Wall Street firms are sort of hoping for a year-end rally. And so, year-end rally, theoretically could take us to new highs, but I'll be impressed if the market's able to break through that overhead resistance line, right? And of course, it goes back to, we always like to look at this too, the Russell 2000, which has the same sort of overhead resistance line going back 9 years, right? I always go to the monthly chart. Well, the monthly chart. Hang on, I gotta set this on. I keep my monthly chart on log a lot of times, but look at that, pretty amazing. Same sort of overhead resistance line, just across the long-term highs. That sucker goes back to, well, basically 9 years. The first like touch of it was back in 2010. So, and you can see that the Russell, this is why I think that the market doesn't feel the market doesn't feel as good as they make it out to be on, TV, right? And the participation amongst, the majority of stocks is not there. And those of you that have been around for many, many years listening to our shows, I mean, we should talk about this 6, 7, 8 years ago. That I always used to mention that I thought that the Russell 2000 was a pretty good proxy for what the majority of stocks are doing and how they feel. And so, you can look around and see that there's tons and tons of stocks that, that peaked out last year, right? In 2018 or earlier. And even with the market, just barely off the highs here, the majority of stocks are not just right up at their highs, right? Majority of stocks are, somewhat languishing below the highs, similar to what you see here in the Russell 2000. So, anyway, I was kind of getting a little sidetracked there, but I was really talking about the overhead resistance line on the S&P. And so what I've done here is I've drawn a couple of I drew an uptrend line across these recent lows, and I drew a downtrend line across these recent highs, right? And so this is sort of the little triangle that we're trapped in right now. And of course, you can see that this is like the over under line here. I'll call it, 29. It's somewhere. It's like a zone between, say, 29.40 and 29.45. But that's really the major support and resistance, right? You can see it was like support this day briefly, right? But it acted as overhead resistance when we were getting this wild, these wild swings here back in August. Typically, August is the summer doldrums and real boring, and this August was the opposite, and it turned out to be September that was basically like the summer doldrums, right? I mean, September was we had this gap up right at the beginning, sort of right at the beginning of September, and then all these days here, there was a couple of days of like that was a significant movement day, but um, so I got a candlestick chart here. So you can see that the majority of September until towards the end when things started getting a little rough here, but the whole beginning of September, except for this one day, you had fairly narrow body candles, and you had these dojis and all that type of stuff. And so anyway, it was kind of boring. So the summer doldrums kind of happened in September, and of course this year, it's been hot everywhere. My parents live in Ohio, and usually in September fall starts, and they're just I think it was in the 90s last week, and so fall's just now starting up there. So hasn't really started here, although it has cooled off a little bit. You can tell it's in the air. So anyway, there's the candlestick chart. There's the 200-day moving average, which interestingly enough, the 200-day moving average on the S&P spent, let me go back here, spent a lot of time just going sideways, right? A sideways 200-day moving average doesn't do much for you, right? And here, here's a good example, right? People say, the first thing you learn in technical analysis is that when the market breaks below the 200-day moving average, that's a sell, right? And so, you broke below it and above it and zigzagged all around it last fall before the market took a winger, but it wasn't doing anything for you because it was going sideways. And same over here, you got a couple of pokes below the 200, Incidentally, let me just go to a year-to-date chart real quick here. And so, incidentally, the year-to-date chart is kind of interesting because the market had a 20% sell-off and then turned around. On Christmas Eve, basically was the bottom, and then you got this humongous rally, and this is like the major support zone, right? That first rally off at the beginning of the year, that was where the first pullback sort of terminated. That was just a little tiny dip. Then we got another leg of the rally, and then a pretty decent sell-off. And incidentally, this candle I have circled up here, that was a Fed day, right? Fed announcement, and they didn't do anything, but basically they announced they said that they were reversing course. That's when it was back here in February. I believe it was probably well, I think it was towards the end of February, but that's when the Fed basically said that they were done hiking rates and that they may have to reverse course and all that stuff, and they were going to stop shrinking the balance sheet. Which back in the day when they announced that they were shrinking the balance sheet, there was a handful of people were kind of talking about that, but and I was, and of course, I was thinking that it was a much bigger deal than everybody was making it out to be, because it's one thing to tighten, have tightened rates all those times, but shrinking the balance sheet was removing liquidity, and I think everybody figured out that that's what caused the big sell-off in the fourth quarter last year. So anyway, so here we are. Go back to my real clean chart here. We're kind of in no man's land, and the market's got to break back above that, what's going to be a resistance right now. So this is like the big support and resistance level, right? 29.45, say 29.40, and we're below that right now, right? So I get up this morning. Today's headlines is that futures are up big on hopes of a deal with China, and all week long, today's only Wednesday, but all week long, all I've been hearing is like sort of an escalation in the trade war. All sorts of nonsense going on, and news hitting the tape and all that kind of stuff. It's been kind of crazy, and the market's been extremely volatile, and so we're kind of in a similar period to August, where you were getting these huge moves up and down, and this was all based on news headlines, right? So I saw a guy, Brian Belsky, on CNBC yesterday, and he said something funny. He said, the next 5% up or 5% down, could be based on a tweet from Donald Trump. And so it's kind of silly, but it's sort of the environment we're in. I don't necessarily agree that a Trump tweet's going to move the market that much, but anyway, so we're sort of trapped in this range. Seasonally speaking, we are, for what it's worth, right? I just saw this morning. Somebody mentioned that seasonally we're entering the strong period of the year, but that didn't necessarily do much for us last year, right? So anyway, if for some reason, and see, a lot's going to hinge on, I guess, the news that comes out of these trade negotiations this week. And if I had to guess, and there was some positive news this morning that the Chinese are willing to make some sort of a partial deal. So if I had to guess, I think that we all know that the administration is using the stock market as a proxy for how well the country's doing, and they've been doing that for a long time. And so my guess is they get China to agree to buy some more soybeans, right, which we heard about this morning, and then they hold off on imposing the additional tariffs, which are supposedly going into effect soon. And then, that saves Christmas, and they hope for a fourth quarter rally, and then maybe the market can rally back up here. And there's always the possibility, I think that's what they're going to try and do. But there's always the possibility that the market, doesn't buy a watered down trade deal. Trump even said, he says that he doesn't want a watered down partial trade deal, that he wants a big trade deal, right? So we'll see what happens with that. My guess is that the market's more important to him, but basically, if you break this trend line, look out, right? You could get a sell down to, and it seems like that's a long way down. I mean, CNBC did a markets in turmoil special this day right here on 8/5, right? Markets in turmoil. And I get, it's because of that 3 day sell off, right? The market had dropped so much, but it's kind of funny because the markets were not in turmoil here, and they weren't in turmoil here. That was just what they like to call a garden variety 8% correction. So anyway, this is the trend right now. This is the trend line to watch. If the market is able to get a rally going back above here, then look and see if it can. See, here's the thing: you got lower highs and higher lows in the near term here, and so market's kind of trapped in that range until it's not. And so today, incidentally, we got this gap up, and we've got like so far we got like an inside day, and it's a narrow range day compared to previously. So we had another like gap up narrow range day back here on 9:30, and nothing really happened. And then the next day, you see what happened. It tried to break out of there. That was like, I guess that's what they call a bull trap, because it broke above like all these previous highs here in the early trading session, and then it reversed and took a winger, right? And then lo and behold, 3 days later, you know, I mean, we're down, S&P down 100 and something points, kind of reminiscent of some of these days over here. So anyway, that's where we are. And as far as as far as the market goes today, I think today's kind of looks so far like a consolidation day based on all the craziness that we've seen over the past couple of weeks. I mean, look at these moves just over that happened last week and the first couple of days of this week, right? So anyway, keep your eye on what the market wants to do within the context of this big triangle here, and of course, what I'm calling the over and under here. So cautious below it, constructive above it, but there's tons of overhead resistance too. The market could muddle along, rally up, and make yet another lower high. All right, that'd be interesting. Tell you what would even be crazier is, I've been talking about how the market likes to sell off after the Fed announcements, right? There's three of them, and I could go back and point out the other ones. But I'll tell you what would be crazy is if the market like was able to rally back up just in time for the Fed to cut rates again, somewhere up around this trend line, and then falls again, right? That almost be spooky, because that'd be the fourth time in a row that it did that same thing. But regardless of all that, we have some open trades and we got some pending trades, and it's fun to talk about the market. It's you've got to we're within like the context of the overall market. But I learned years ago, I remember a long time ago, like it dawned on me, and I don't really remember what this was, but it dawned on me that worrying about the overall market is is kind of, it's fun, and you want to know the context that you're in. But I mean, unless you're in like a rip roaring trend higher, or the market's melting down like it did in the fourth quarter last year, generally speaking, it's much it's much more productive to focus on individual stock charts, right? Individual stock charts are because there's always stocks going up and stocks going down, and good setups, and earnings and news and stuff. So without further ado, um, The individual chart setups are the most important thing, right? So look at this chart of Hershey, right? Since the beginning of the year, just a tremendous uptrend, barely a pullback, right? There was one little pullback in the summer over here, and then there's some craziness over here. I don't know. This is probably earnings related, whatever. But anyway, strong uptrend stock finally has a real pullback and nice pivot low, move off the low, and then here we are. Now it's a little weak today, but this is just looks to me like a little consolidation of these recent gains, right? So I mean it looks kind of dramatic, but this is kind of a slow mover, and it would be interesting to note how Hershey does around Halloween, which is probably their big. This is probably their biggest quarter here, right? Fourth quarter with Halloween and everything, and the holidays. So anyway, check out. You know, Off to the races, right? And then it's a little bit of a. Yesterday was kind of a nasty day in the overall market, obviously, and so today it's just kind of hanging in there. And there was a lot of sideways action after it triggered over here. A lot of sideways action. Then it managed to rally up. Now it's consolidating that. But look at how the stop has moved up. So stop's getting. I mean, for a stock this at this price, $150 stock, we're essentially at break even here, and so far so good, right? So far so good. I see charts like this. It looks like it's maybe ready to roll over. In the big context of things, though, you go back and look at this chart. So that stops trying to stay just the trailing stop is trying to stay just far enough behind that it won't get knocked out on just general volatility, right? Just run of the mill volatility, right? That's sort of the idea there. Is we want to be able to withstand a little bit of a normal sort of consolidation pullback without having the stop triggered, but obviously that stop, the closer it gets to the trigger price and or break even. Another thing I want to mention real quick is that in these extremely volatile conditions that we're seeing, like big up, big down days, that type of thing, it's not a bad idea. Not a bad idea to if you see a stock that looks good, set a limit order at the trigger, right? Because chances are you'll get filled. Not always, and I've been saying that for a while. I mean the sort of the basic premise under normal conditions is that a stock triggers when the day after it closes above the trigger, and like you can see here, right? The Not that it was a big deal, but the trigger price is 154.30, and this day it closed at 155.66. That was a buck 36 over the trigger, right? And so the very next morning, that's when it would have triggered. The open was 155.30, which was a buck over the trigger, but and so, in the big scheme of thing, not going to make a huge amount of difference. And like I've been saying, if you bought it, if you got in a buck over the trigger, all you do is just compensate for that with the target price. Now you want to leave the stops, matching what the trailing stop says, right? Because those are actually calculated based off the real price. But you can compensate for getting in one of these trades a little bit over the trigger by you adjust that with the target. So, but anyway, in this sort of environment, actually placing a limit order at the trigger is going to fill you most times. So let's look at Costco. Costco, another example. Basically, and Costco looking pretty good here. This is an interesting one. The funny thing is that Costco was a really good trade. Back August into September, right? I don't even remember what this day was about here. I don't believe that was earnings because it triggered in this time on earnings, right? I'm pretty sure earnings came out here on like 10.3 or 10.4, and so it triggered in on a positive earnings reaction. Anyway, what's interesting about this is that there was a decent trade in it over here. We just blasted through the target for whatever reason on this particular day, and I'm not sure what that was, but and then made a huge move, and then by the time it took out the trailing stop, boy, that thing was way up here. The trailing stop ratcheted up really quickly because there was a lot of movement. So this time around, you had a really nice pullback, and you guys know that a lot of these same stocks will trigger after, if the setup's just right. Usually it doesn't happen this quickly, but sometimes it does. We had one in Apple like that, right? We had a trade in Apple. It had a consolidation pullback over a few weeks or a month, and then another trade. So, anywho, Costco looking pretty good. But what's interesting about this is that trailing stop is still sitting way down here at the initial stop. I expect this to ratchet up, like probably after tonight's update. This will probably ratchet up significantly. Um, it's kind of due. I believe that the reason that it's still sitting down here, sort of at the bottom of the pattern, is because of these two long range days and the fact that it hasn't really been making any forward progress until today. Now today it's looking pretty good. So I would imagine that this stop will ratchet up fairly quickly, probably tonight. It just depends. It just depends. So it's a function of price and time, and so this is only it's only been open for a few days, and so there you go. But anyway, and of course you can always make a decision to you can always kind of make your own decision if you wanted to have a tighter stop on this, but I wouldn't be too concerned about it. I would wait and see, what the stop looks like the next couple of days here. And as you know, we use the monthly ATR, right? So you figure that this ATR is kind of calculated based on the ranges going back an entire month, which is going to include this day and these days, and so the stop is going to, as these long range days drop off. So let's see, that was 827. Well, maybe that has dropped off, but this one right here, that was a huge long range day. Yeah, so this day's probably, these couple of days here are going to drop off of the monthly ATR, and so a couple long range days here. But anyway, that was sort of the point of it. If you were wondering why this stop hasn't moved up yet, it's because of just sort of the nature of the ATR of this stock. Moving on, we got Wendy's here. This is kind of a funky one. I mean, the stock's pretty zigzaggy. The increments are only a quarter. It has a pretty low ATR, pretty low beta or whatever, and massive run up. And then I'm gonna guess that this was like an earnings miss or something. And so, but anyway, I was kind of surprised to see this one in here, but it's kind of interesting. It didn't trigger over here. There was no setup over here, but this second little sort of pattern here. I'm not a honestly not a huge fan of this chart, so take it for what it's worth. uh, had a pretty nice little basing pattern, broke above it, and then of course, trigger being here. That open that day was 2043, 13 cents over the trigger. No huge big deal. Again, it filled at the trigger price. Looking a little sketchy there. It had, with the market selling off for a couple of days, this got obviously swept up with that, and so looks like yesterday could turn out to be a pretty decent little pivot low. So anyway, the chart's a little bit sketchy because of that gap down there. So, but here's the thing: no huge no huge big deal on this. So we'll see what happens with Wendy's. This SWCH, boy, this thing, this is a good looking chart pattern. Um, I kind of like the look of this. So you put this on go to my candlestick chart here. Put this on a candlestick chart, draw a trend line across those highs, and you can see that, whoops, let me move this out of the way here. There's a couple, when you're using candlesticks, there's a couple different ways to draw these trend lines, but this is a pretty nice looking little setup here, to tell you the truth. Just so happened that it broke above this trend line and had that little sort of doji day right there, and pull back yesterday with the overall market, and it's kind of looking okay. It's sort of in like pullback mode or whatever, and it's trying to break back out of that pullback mode. But bigger scheme of things, this is one heck of a good looking chart. The question is whether this pullback's got more more downside or not. And so, but I do kind of like the look of this. The reason I switched to the candlestick chart is that it makes more sense. I mean, the other thing is that, like, if I were to draw this trend line across these highs here, it's still sort. You didn't actually get a close above that trend. Like this trigger day didn't close above that trend line. It just kind of poked above it. So all in all, not looking too bad. I kind of like the look of this chart, and it's trying to break out of the upper end of this deal. Whether you want to draw these trend lines with a candlestick or with this type of chart, across the actual highs. Um, good looking stock. If this thing gets some upside momentum, I would expect something like this or something like it got back here, or even back here. This one sort of has a habit of just like ripping higher all of a sudden out of the blue, and then kind of maintaining its upward trend. It's done that several times here. It's kind of ripped higher and then still sort of maintained its uptrend. And so this is actually really the first sort of real pullback that it's had in a while, since back here. And right after this pullback back here, you can see that in 3 days it just blasted higher. So kind of like this one, and it's a lower price stock too. So kind of liking it. And the other nice thing is it's still like right here at the trigger price, right? And so theoretically, if you like what you see here, you could jump in here like a little bit below. It's a valid open trade, and so the fact that it's pulled back a little bit, you could set a limit order. I'll tell you the thing to do. Look at today's high. Today's high is 1574. The trigger's 1575. You just set a limit order at 1575, and then if you weren't in it already, obviously, and then you'd be good to go in the event it blasts off. If for some reason, it fades and drops down, you wouldn't be in, and so that'd be the ticket right there. A limit order, right at 1575, which means that it'd have to hit the high of the day, and would also be breaking back out of this thing, kind of proving itself. So I like the look of that. Um, this LSCC, these semiconductors are extremely volatile, and that basically accounts for this super wide stop, right? So this is again, you got a trend line break here, and chart doesn't always like to play nice when I'm zoomed in this far, so I usually gotta kind of zoom out, but it's the same sort of thing, right? Um, we had a good trade in this, uh, back in the summer, and it got closed ahead of earnings, but it triggered in, can spend a few days chopping around sideways, hit the target relatively quick, kept going. The trailing stop had moved up considerably, and so big scheme of things, really nice uptrend. Um, Last earnings season, you can see that it got closed ahead of earnings, right? It never actually hit the trailing stop. It just basically something else to keep in mind is that we close these things the day before they release earnings, and so because we don't want any big surprises, and we don't want to wake up one morning to a stock gapping down 20 or 30%, right? I mean the funny thing about this is that so we closed it ahead of earnings, and then look what happened. Huge. I mean, this was a huge pop right there, percentage wise. So, and again, we discuss how flexible the system is, and the system is so flexible that if you wanted to, take partial profits at the target, or whatever, there was a parabolic stop up here, and maybe hang on to just a little tiny piece to roll the dice. Obviously, you have that option. I sort of advise against it, but here's a case where closing it ahead of earnings was left a lot on the table, so to speak. Right? So anyhow, long story short, it kind of held up, had a lot of volatility, and now it's just, it's coming off of a pullback, coming off of a nice pullback. Some people would say, I see people post charts all the time, like this, that would say, hey, nice trend line break, nice throwback, kind of a throwback to the trend line, and now it's setting up to move higher. It hasn't had enough forward progress to change the initial stop yet, and so that the initial stop is still hanging down here at the lows of the just below the lows of the pattern, and so we'll see what happens. This stock has a pretty good range. These are some has a lot of long range days, and so that's why you got to give it, enough wiggle room that, again, that you don't get knocked out just on normal price fluctuation, right? That's sort of the key. And that's why, the trailing stops are all calculated and like I said, a function of price and time. So a couple days into this, and especially with like this pullback or whatever, so here's another one that's still perfectly valid right now. Another lower price stock that be two ways to play this. One is you could place a limit order right up here at the trigger price at $19, and if this stock is going to make a big move up here, then it's going to pass through $19 on the way there. Of course, unless you get a big gap up. There's not a whole lot of gaps on this chart. The bars do tend to overlap, but you never know. But so that's still totally valid, catching on the way up. Or in theory, you pull the trigger right now and get in what 38 cents, roughly around 38 cents below the trigger price. Stick to the stop, right? So as time goes on, if this thing were to just like sort of move around sideways between 18 and 19, this trailing stop will come up very, very gradually. Um, any forward progress higher, trailing stop will come up quickly, and then so it's all a function of what the price does after it triggers in, and like I said, it's a function of price and time, and obviously you've heard me say that these things are dynamic. You know, um, there's some pending trades that look kind of interesting. Thought maybe we would look at some of these real quick, just to see what some of them look like, and since the market's kind of dull here, the market is today's interesting so far because just a really sort of a consolidation, like a nothing inside consolidation, narrow range day. Obviously, this is the narrowest range that we've seen in, I mean, I see like two other narrow range days here since, you know, the Fed lowered rates since mid September, we've had really volatile price action, and so this is what we got here. I'm not sure if the Fed minutes will do anything when the Fed minutes come out at 2 o'clock. I'm not sure if they're going to mean anything, because everything that what Powell was talking about yesterday kind of supersedes anything that was said, during the last Fed minutes, right? Now CNBC's on, and I got the sound off. Obviously, it says stocks rally on trade optimism, which is kind of a joke, because you got this big gap up, but I wouldn't exactly call that a rally, right? I mean, it's like they drove up the futures overnight, based on a Bloomberg headline or something. And just because the market is higher than it closed yesterday doesn't mean that it's rallying. That's the thing that you guys, any of you that have been around for, listening to me ramble for 10 years now, know that, everything that the way that I always view the market is the directional move off of today's open rather than yesterday's close, right? Because, with the sort of the smoke screen, take this day for instance. Let's look at this day. I'll just touch on this real quick. The big smoke screen that they always Wall Street always likes to throw up is is comparing, like, today where we are right now compared to yesterday's close. And so a day like this, kind of reminds me of today. You had a big gap up, and then as long as the price, even though like it gapped up and spent the whole day going down, right? They call that a rally. And so meanwhile, you're sitting there, and the market opens and all your stocks are up real nicely, and then you just watch them fade and fade and fade and fade. And meanwhile, CNBC is talking about stocks are rallying while they're actually going down from the open, but they just happen to be higher than the previous day's close. And so, here's another great example of that, right? Massive gap up this day, and then spends all day, the market spends all day like going down. And then, so, as soon as it finally goes back to, where it closed the day before, they're like, stocks are, off their highs, losing a little bit of steam, whatever. But it's just kind of funny. So, you know, they like to refer to where we are now as opposed, based on yesterday's close, and not based on what's actually happening today. Stocks are not rallying today. you know, they gapped up and they're essentially going nowhere. So it's gonna be interesting to see. And so here's the thing: is that just looking at the up and down zigzagging that we've seen since the open, today could turn out to be nothing, or some news could break later. See, that's the whole thing. Is like we're in sort of an event-driven, news-driven market, so anything could happen. All right, let's blaze through some of these charts real quick, of the pending trades, and just for the fun of it, let's see if any of them look like really good. You can keep an eye on these. You can keep an eye on the pending trades here and see what they look like as far as triggers. All right, so let's see. Trigger 1505 on this one. And by the way, these triggers, the trigger can change like literally on a daily basis, right? A lot of times the trigger will start off like super wide and then tighten up, tighten up, tighten up. That's kind of the idea. Like a stock has a giant pullback, and then what normally on a swing cycle, what you want to see is, and I mean they're all kind of a little bit different, but a good sort of the optimum swing cycle is a stock that's in a real nice uptrend, and it has relatively orderly pullback. And this chart's not a great example, but stock has a nice orderly pullback, and then spends several days with the range tightening up and tightening up, and that's when that trigger price like comes down, comes down, comes down, and then ideally it triggers in off of like some real narrow range bars. In this case, it's pretty obvious to see what's happening is that this is this has a nice pullback, a sort of a wide consolidation, and the potential to to take off and blast back up through there and and take another leg higher. Not a great example, so let's move on. This is probably this is a little bit better of an example. Although this is a utility, but I'm not a big fan of utilities, but same sort of thing here. I mean, a trigger on this is 31 bucks, which is which is above these highs, and so theoretically what I was talking about is if this thing sort of settled down and spent some time like say with some real narrow range bars, this would come down, come down, come down, and then you get like you get a trigger like there. And so that's sort of conceptually, and again, this is probably not a really great example of what I'm talking about because it's utility, and you don't really see a whole lot of narrow range consolidations here, but um, this is not exactly a super high octane stock, but you do have a pretty nice uptrend going here. Broke out of this channel, and so now you kind of pull back a little bit, and so theoretically you get some consolidation here, and then and you can see like this stock it tends to it starts moving in one direction. It moves significantly, for what it is, being a utility. And so anyway, let's look at the next one. So here we go. Now we're talking. I had a feeling eventually we'd stumble across one that actually looked really really nice, and it doesn't get much better than that. That is, I mean, that's just it's expensive stock, right? But that's a beautiful uptrend there. That is just this is exactly the type of stuff. Now, obviously, it could pull back to this trend line, and if it pulled back to the trend line, boy, that'd really set it up. But it doesn't always do that. It has like a bunch of it has shallow pullbacks and sideways sort of consolidations. This wasn't even a pullback to the trend line. It was basically just sort of a sideways consolidation. So I like to look at that. Interestingly enough, the trigger on this is right here, 267. Right. What's today's high? Today's high, 267.50. Right. So I mean, in theory, this thing could these expensive stocks like this are they're a little bit rough. I mean, I know some of you trade options, and so yeah, that might be the ticket on something like this, but it's all about percentages anyway. If you bought 10 shares of this thing or whatever, and it goes, up 10%, then still the same amount of money as if you bought, that amount of a lower price stock and it went up 10%. Anyway, it's good. This regardless, this is just a good looking chart. So FOY, nice uptrend, decent pullback. Um, I'm gonna blaze through these. I'm not gonna mark the entry. So I mean, this thing's obviously it's got to rally, back up and break this. It's gonna have to rally back up and break this trend line in order for it to trigger. So AutoNation, this one's actually got a pretty good look to it, right? Look at this. Something going on back here. For whatever reason, this might have been, you know what I think this was? I think this is one that we had to, I think that was an earnings pop. And so I had marked the trigger on here, like doing kind of what I'm doing now. And then it had to get pulled. That's the reason it's not marked up over here because it had to get pulled because it was coming out with earnings. when earnings season gets here, things get a little trickier because we have stocks that are, pending, that are coming out with earnings the next day, and of course, you don't want to we don't want to jump in a stock ahead of earnings, although, sometimes it works. But anyway, moving on, you got a beautiful pivot low yet. You got a nice sort of, stock in a really nice uptrend, obviously, right? Beautiful uptrend. And just had a pullback, and you got a perfect pivot low yesterday. Let's see, what's it? 48.80. 48.80. So that's right there. Um, this is probably a really good example of what I was just talking about a few minutes ago. Boy, it annoys me that just does not want to stay on that pivot low. But anyway, so what I was talking about, like, nice uptrending stock has a real nice pullback, and so the trigger price is, is still kind of up there. It's probably been coming down, and if this thing were to consolidate sort of in this range for a few more days, my guess is that trigger will come down to, probably probably this area, and then that's a pretty good little setup for a rally back up, right? So keep your eye on this one. This is, so far at all the ones we looked at, this one looks like is probably my favorite. And of course, I mean, it looks like a pretty good trade right here, even as we speak. Like that looks like a reasonable trade, and so long on a break over this, stop right down here. I might as well just put the stop on this because unless there's like another big leg down, in which case, this could still like, fade more and still be on the pending list. It just depends, right? Stocks stay on the pending list, and then sometimes they disappear. Jeffrey's got a whole bunch of, calculations that decide when a pending stock, gets dropped off the list, or when it continues to stay on there. So anyway, right now, let me move this back to where it goes. 48.80. So keep your eye on Auto Nation. Um, Real quick, blaze through the rest of these. This ABG, this was one of our better recent trades here, right? I mean, this thing. Look at all the trailing stops. Finally, I marked on here. Finally got taken out. Yeah, this was a beauty. Funny thing is, got taken out and then had, this crazy sort of reversal day. I don't know what that was all about, but it's setting up again. My guess is it's going to need to chop around for, a while longer before it triggers. So, LDOS, not familiar with this. I'm not even familiar with this, but nice big uptrend stock in the process of a pullback. It'll have to consolidate and turn back up to trigger. JEC. Still a little early on this one. This was another one that, that just had a really good trade, and so, now it's in the process of a pullback, and so it's setting up again, but probably needs more time to consolidate. Oh, well, this one, this is going to be. This one kind of took me by surprise here. The 78.75 was the trigger price on this, and so this is going to be one of those 78.75. That's down here in the gap. Sometimes this happens. This looked like some of the other ones that we've seen where, nice uptrend, real nice pullback, and some news must come out or something on this. As a matter of fact, let me look real quick. I want to see, I want to see what the GNRC. What is the news? I see absolutely no news on this. GNRC, blah, blah, blah. Oh, it has to do with the California power outages. PG&E said that it's implementing power cutoffs to reduce wildfires, blah, blah, blah. Right? You guys probably heard about that. And so, this is just a case where, there's nothing, there's nothing that obviously, our algos are trading based off of charts and technical analysis and indicators and all that kind of stuff, which is cool. But they can't, obviously predict when a stock is going to make a move like this based on some kind of wacky news, right? And so, there was almost, there was almost no way to, other than the fact it was pending and had a pretty decent little setup work in there. There was no way to anticipate this move here today, and so. But hey, at least it was on our radar. So look at how nice it's set up back over here. I don't remember, there's been times where I haven't been able to mark up every single one, but boy, look at that. And the funny thing is that this sort of pullback that it was in was sort of shaping up very similar to what it did back there. So anyway, this one's kind of a lost cause. Although, there's still sometimes you see a move like this, and it's the beginning of a much larger move, right? I mean, we see stocks that move like this on earnings, and then they take off and never look back. And so definitely keep your eye on that. I'm not sure I would chase this one no matter what. All right, real quick, go through these last few. Carlisle Group, that was a pretty sharp sell off and kind of a bounce. Not sure how much I like that chart at this point. Twitter's shaping up pretty well here because Twitter's pullback that it's having right now is kind of a nice long duration pullback. I sort of feel as though the longer duration pullbacks, there was like this one, right? This one back here. That was a nice it was like 2.5 months of a long, it hit sort of some highs here, and then spent 2.5 months like pulling back, consolidating, broke out of this little range here, broke out of that little pattern, and went on and did great things. And there was a couple of trades in between there, but so this gap's closed. Nice sort of long duration pullback. If this thing were to sort of consolidate and sort of turn higher here, it could set up. Still got a ways to go. This one, it's kind of a funky looking pattern. Not too exciting, although it could slingshot right back up to these highs. Rambus, and I'm going on my other screen here. What I'm doing is just going down this list of pending trades here. So, and like I said, keep in mind that Rambus is setting up very nice here. Look, we had a really good trade in Rambus back over here, closed ahead of earnings, right there, and then it actually had a negative earnings reaction. I'm not sure. This was something I was just probably mocking up on the chart talking about. But yeah, Rambus is setting up pretty well again. I like the look of this. So there's another one to keep your eye on. Right now, as we speak, 1310 is the trigger price. It's not that far away. So yeah, this is. I'd like to see Rambus trigger in here. This is a beauty. That is as a good looking potential setup there, right? Assuming that yesterday is like the pivot low of the cycle, right? Sometimes you get these and I mean it looks beautiful, right? Everything looks beautiful right here, and but yet it's still got further to go. It could end up down here. So, but as I sit here and look at this, this has got some pretty decent potential here, right? Although what's interesting about this, if you look at yesterday and today, it almost looks like these 2 days right here, right? You faded down a little bit. You had what looked like a pivot low right here, and then, a day that looks almost identical today, and you see what happened. And so, that's one of the, and so, of course, I could tweak my trend line a little bit. So, yeah, sometimes I like to draw them off the candlesticks, and then I like to come back and draw something like that. But this looks totally reasonable. And so, this is probably a great example of why we want to see a close over the trigger, right? And I mean, it's a double edged sword, right? I mean, you could theoretically, I hate to even say it, but I mean, just throwing this out here as an idea is like, theoretically, you could place a limit order to get filled, at the trigger price or whatever, and you know, but here's the thing: is like, say like tomorrow intraday it pokes over that and then fails and starts to come back down, it's not going to be an open trade. So unless it closes over the trigger price, it's not going to get moved to an open trade. And so, you know, here's the thing is that there could, it could it could poke up above there and then continue to fade down. Maybe I'd end up moving this trend line, across that high or whatever. And not that that even matters, but basically, if this thing continues to fade down, this trigger price could, this could end up triggering like, down here, just hypothetically. And so that's why it's best to stick to the strategy, but there is some flexibility. There's some flexibility, right? So anyway, real quick, there's only a couple more, so look at those and then wrap it up. Comcast, I'm not sure what that line is. Probably a previous high. Yeah, Comcast, nice uptrend stock in the midst of a pullback. WST, a little choppy, but still decent looking stock. And finally, Lulu. Lulu's actually got a pretty good look here, right? Kind of like a little high tight flag there. And so, yeah, keep in mind that the trigger prices on these suckers can literally move, on a daily basis, right? So after we run the update at night, a few hours after the close or whatever, make sure you go back and take a look at the trigger prices and see if they've moved. If you got something on deck that you're watching, and the other thing, obviously, before I wrap this up, to note is that same with the trailing stops. The idea is that a lot of times these trailing stops can literally, on an open position, can move on a daily basis, right? Daily basis. And so my guess is like this stop is going to move. Sometimes literally the day after they trigger, the stops move up, and then sometimes it takes a little while, right? So it's going to be interesting with Costco, like pulling away from the trigger area, yet with the stop all the way still back below at the initial stop. It's going to be interesting to see this one and how it moves up today, so how significantly it moves up. So anyway, hey, thanks for tuning into the show. Um, keep your eye for some new stocks triggering. Keep your eye on the overall market, what I was talking about. It looks like we're kind of we're in a precarious spot here, very news driven market, and so it's going to be an interesting fourth quarter, that's for sure. So it's kind of fun. There's some action finally. I don't care what the market does as long as it moves, as long as there's some action. There's nothing worse than a dull market. So, but anyway, out of the stocks I just looked at, there's some pretty good setups, that are out there, and so keep that in mind. Even though the market's been acting kind of weak here lately, if we see some strength come in, then if and when we see some strength come in, a few of those stocks are set up pretty good. So anyway, thanks for tuning in, and I will see you guys back here next week.